Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points.
In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing and rejecting to the upside a quite strong historical support and demand area. This zone, in fact, was already acting as previous support starting from here, from which all these previous rejections to the upside have been created. And at the moment, what we can see is that the market is testing the exact same level, has already started being rejected to the upside. So in a situation like this, more bullish price action could be expected away from this level, as already happened in the past every single time that the market was testing this exact same area. Now, let's keep this in mind and move down on the weekly time frame. Now, from a weekly perspective, the situation is quite clear as well. We can notice how the market has just created the third higher low. Starting from here, we had a low, then we had a higher low here after some intermediate price action, then another higher low, and now the market seems to be in the process of finally creating a new higher high, so higher than the previous one here, because that would establish an uptrend from a weekly standpoint, because so far what we have seen is kind of equal highs and higher lows. So kind of this W formation. Now, if from here the market will break above, at that point we could easily enter into an uptrend with the creation of higher highs and higher lows from a weekly standpoint. So from a weekly perspective, everything seems quite bullish and we could expect more potential bullish price action to be created here from a weekly standpoint. Dropping down on the daily time frame, what do we see? Now, here on the daily, I did speak about EURUSD when the market was around this area. I explained all the reasons for which we could expect this rejection to the upside, which is in fact exactly what the market just gave us. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. But at the moment, what we can see is that there is new structure which is now being created. The market has now broken above this previous daily resistance, which now is turned support here. So in a situation like this, there is a good probability that if we will see a retest of this area, we could see some institutional longing inside of this zone, which at that point could further increase the probabilities of a potential rejection to the upside away from this area. Now, why am I speaking about institutional longing? Because if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing, and we check the data precisely for the euro, the first thing that we have to keep in mind is that if we're looking at the data for the euro, we're actually already looking at EURUSD because all currencies on the spot are traded against the USD. And what we can notice here is that with the last reports, we just had a shift from having a negative net positioning to now having a positive net positioning. So essentially, we went from having more shorts than longs with 173k shorts and only 164k longs to now having a complete opposite situation. So more longs than shorts, 165k longs compared to only 162k shorts. So EURUSD is currently getting quite strong. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you go and check out my free Telegram channel, which you can find and join directly from the link in description. And you find it also here on the screen, so you never miss new updates. Now, back to the analysis. So let's keep in mind that institutions just moved from having more shorts than longs to now having more longs than shorts, and move back to the technical aspect of this market. And what we can also notice here from a technical perspective is that we just had a strong impulse. And after an impulse, if we want to measure the potential correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.618, 0.786 Fibonacci retracements, which are lining up exactly with the previous resistance turn support, therefore creating a confluence of support. And inside of a confluence of support area, you have an increased probability of getting institutional longing, which at that point further increases the probabilities of a potential rejection to the upside. So what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COD data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames. So 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COD data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.